Hi, everyone, and welcome to the monthly podcast with Collin Plume, CEO of Noble Gold, who's been gracious enough to give us his time and insights on key information regarding precious metals as we see it's moving precipitously in the right direction, and it will only have the continuation going forward. So it's great to have a sponsor, an endorsee who can help us navigate through these very exciting and uncertain times, which they bring us clarity and certainty. So we've got some questions for him as always. If you're new to the podcast, please do like, subscribe, and share. Helps the channel grow and others to gain in the knowledge you're currently being afforded. As you know, Collin is the CEO of Noble Gold, a family-owned business. He has nearly 2 decades in it, and they help with the retail investor for gold, copper, and silver, as well as 401k and IRA conversions, which I've had some family and friends actually working on right now as we speak. So I'm taking care of my own family from within, and I'm trusting them with my investments with Noble Gold as well. So we have skin in the game, and I'm delighted as always to have Collin joining us back. Collin, how are you today, good sir?
I am fantastic. So good to be on the show. Lot to talk about. Very interesting over the Thanksgiving weekend. Some things that I'm sure we're going to dive into. But it's been great. I had a little time out of town with my wife and got to just kind of refocus and read and just kind of like really being able to like just have some me time with my wife and reconnect. We've been married for 13, almost 14 years. We have 3 lovely children and we love them, but we do like to be away from them a little. I think we try to get away 2 to 3 times a year, just us, 1 to 2 nights,
Yeah.
and just kind of remember that there is us. And so I came back from that. So I'm excited to be on. I'm feeling rejuvenated and excited. I know we're coming into the end of the year and I'm like, wait a minute, I got a lot of energy now. I don't want to turn it off. So but thank you for having me on, John. It's always fun to be on the show.
No, it's a privilege, and congratulations on the anniversary. And you do need to rejuvenate and tell her thank you for
Absolutely.
donating her time for shows like this. I know she knows it's ultimately your livelihood, but it's still a sacrifice on her part. We appreciate that. So, and you're quite right. That is my first question I want to ask you. Actually, coming off of the heels of Thanksgiving, I was hoping you could elaborate as to what you think happened at the CMA on Thanksgiving Day. Was that a cooling tower problem, or did the exchange purposely close because of what is happening with the silver market at this time?
Yeah, and actually it goes along to what I was talking about, how I had some time to think and I've been studying a lot about what happened during the crash of 29 in October. And very similar, they tried to they were having so many runs on the stock market that they eventually came up with this idea because back then, I mean, this is so fascinating. They actually had to manually do these trades, right? There was actually traders on the floor. There was so many sale orders during this time, so many people that were selling that the traders were working basically 24 hours a day because they couldn't even catch up as the orders were coming in. They couldn't even get them processed, and they had to write them down with paper. And so they came up with, Morgan Stanley and other people that were sort of in the banks, and they obviously had a board of the stock market. They came up with this idea to say that they needed to make the stock market less hours because they needed to give people a break. And, you know, it was sort of true. There was sort of some truth. So I think there's maybe some truth to this, what happened to CME. But if you look at the CME, there's only been a few times that it's actually been halted. It happened a little bit in July of 24. It happened in 2019. So it's happened very few times, but it's never happened for 11 hours. And every common sense person would say, well, what are the redundancies that they have in place to protect? And they do have a redundancy in place. They have a setup that out of the office of in Illinois, that if they have a shutdown, they have the redundancy set up in New York. And so everything's supposed to shift to New York. So they have this in place, but they didn't use it. And so the question I would ask is, why didn't they use it? And initially they said they thought the shortage would be shorter. But once it went an hour or two or three, why didn't they shift? And in my opinion, I mean, you look at the reports of how much silver they need to back up, and silver is skyrocketing at this point. So is it a coincidence that at that time they shut down the market? It doesn't make any sense. It literally doesn't make sense that it could be an accident.
Completely
It
agree.
may, it may have been an accident for an hour, but in my opinion, there will be lawsuits over this
Oh yeah.
because it lasted for 11 hours. They were trying to slow things down.
Hmm.
And I woke up on Friday, saw the news, saw what was happening. And, you see these things happen. And who are they trying to protect? They're trying to protect the exchanges that are literally trying to think of how can they keep up with this demand. And then also, what about all the people that are getting hemorrhaged that bet wrong, that
Exactly.
bet, they bet the wrong way.
Right.
Um, and, the thing that's happening this year in precious metals is that it's all fine and dandy, all this stuff that's happening until people want their gold and they want their silver. What people don't realize is that there's only about 2% of these kind of contracts that they actually call in the contract. If they go to even 4 or 5 or 6%, they will not have enough. And then what will happen? What will happen if people just start calling in their contracts? All these big
Hmm.
institutions, they go to 10%, they go to 12. The idea is it should be 1 for 1. We know it's not, but that is the idea behind it. So I think as an investor, you have to realize that this Ponzi scheme, the CME, the London Exchange, these were all created to keep the price low. And you have to
Right.
believe that that's true, because when you see an exchange going up so much that it mysteriously shuts down, you have to wonder, why would they want it to shut down? It should be a free market. There should be winners and losers on both sides. But the problem is the exchange it's bursting at the seams. And that's what people don't realize, is that if we get tested, if they test the market and people go, everybody wants their contracts, where will the price go?
Exactly.
It'll go to a point that is unimaginable. And
Yeah.
so it's starting to happen. People are starting to say, no, I don't want this contract anymore. And that's the thing that's really scary for these institutions, because they make money in a more normal market where everybody doesn't want it. They don't want you to take possession. They're afraid of that. And I've seen it over the last 30 days. The physical demand is going up exponentially. People are buying. It's back. The market's back. I mean, people are, they earlier this year they were buying silver, but now they're buying in droves and droves. And the mints have been slowing down production for the last 12 to 18 months. Now they're going to start to catch up, but they're going to be behind it, right? And it's going to take them another 12 to 18 months to get product out there. They have to source it, they have to mint it. It doesn't happen quickly. So people are going to be surprised in the next few years how this is going to affect the price. But I think that to think that it was a total accident, I think it was an opportunity where it probably went down, and then they said, you know what, we can slow down trading if we just keep it on the same server, because they have it. And you could read the report. I mean, you don't have to take my word for it. I mean, they have this redundancy in place, and yet they decided not to use it.
Exactly. Thank you for that, Colin. And I purposely think it was manipulation, much like the movies with the TV show networks where they have a big mistake or a guffaw, and they try to, cut camera, cut to commercial to try
Right.
to deviate off the mistake and or the guffaw. And I think they purposely tried to slow this thing down, but they can't. As you said, it's inevitable. I mean, this is, from what I understand, one of the largest months in history every year, December, for delivery for silver. So what
Yes.
perfect timing that we're having this discussion. And I put up while you were talking, I put up the real-time gold and silver price so people see it, not the futures market, but the real-time price.
Yeah.
You can see it's just continuing to move up no matter what they try to do.
And if you go one step further, if you think about
Yeah.
it, if you think of this is why you really have to get granular in this conversation because you say to yourself, someone says, there's a skeptic says, well, why, if people are going to take possession, like, why does it matter that the price is? Because the lease rates on silver. So people that needed to get silver, they were paying at one point earlier this year over 30% to lease some silver to get the physical silver. If it keeps going up and you have a contract at $48 and it keeps going up to 60, that means you got to pay 60. The buyer came in at 48, you got to pay 60 to fulfill that contract. How much money are these institutions going to lose if they didn't have it at the actual price the person bought it for? Does that make sense? That's the thing that people don't realize. That's why they
Really.
would want to slow things down. In a normal market, if something moves up or down in a day, 1 or 2 or 3%, it's fine. But we're up 100%. So if anybody had a contract from earlier this year at $30, and then the person that wants it at 60 or 58, how much money is that institution losing having to acquire that metal at double the price? That's what we're talking about today. And that's why this idea of 300 to 1 ETF paper to actual physical, like this is in these types of scenarios, this is the problem with being in a paper contract is because eventually the institution's going to say, well, we can't fulfill at that higher price. I know you gave us the money at 48. I know you thought you locked in the price of 48 or 28 or 38, but we can't pay because we made a mistake. Um, it reminds me a little bit of what happened during COVID. I mean, the same thing happened when the world shut down. Luckily, I bought every 1,000-ounce silver bar and kilo bar that was available. And
Wow.
so I never had one day that I could not lock in a price. Whereas if you went on Kitco and AppMax and all these big guys, they had no silver. They had no silver pricing. I don't know if you remember that. But people called us and they would like almost chuckle because they're like, you can lock in a price? And I was like, yeah, I can lock in a price. So it's gonna be about who can get it when things shift again. And I do imagine that there will be a point that we will run out again. And luckily, based on the fact that we have incredible relationships all over the world, we also have a lot of people selling back to us. I don't think we'll ever run into that situation again where we are not able to take orders. Now, if you want a specific coin, we might not have it. But if you're okay to take a bar, which is equally as good, I guarantee we're going to have it going forward. So this is an unusual time, but maybe it's becoming more of a normal time, John.
I think so. I think so, Colin, and not to certainly cozy up to you or anything like that, but that's one of the things I've always liked about you and the company is you under promise and over deliver. You don't make these shallow promises, and then when it comes due, you can't help people. You see ahead, you plan ahead, and you stockpile accordingly. It wasn't for hoarding purposes; it was more of a strategic thing you did. And you're exactly right. This happened during COVID. And now it's just that the bill is due and the paper isn't going to cut it. And even these speculators and backwardization shorters know that, and they're trying to get up on it because they know the jig is up. And at some point it was going to come. We're there.
Yeah.
So the move on Thanksgiving and Black Friday, Colin, was spectacular. What you mentioned with the silver market being up over 100%. Do you think this can continue? And do you have a short-term target on the silver spot for the remainder of this year?
Well, I mean, we're in December. I think, you're definitely going to see some sell-offs at some point. Some people are going to take some profits this year. I don't think that would be unusual. But I also think a lot of it could be if they do cut rates one more time, which I know they've been hinting at.
I think they
If they cut
will.
rates now with inflation going up, it's like a desperate plea, right? They're not saying we're doing it because this is the dynamic that we should be doing. Because if you believe the Fed's job is to keep inflation and high jobs, if inflation comes out again at 3% or it's trending up, for them to cut rates, it's sort of an admission that it's kind of out of control, right? They can't control it. And I'm not saying it's the wrong thing to do. Because I actually think the new norm is going to be 3%. I've been saying that for, I think, about 3 years. I think 3%. My gut is that quantitative easing happens next year and they come out and say 3% is their new target. That's what I believe will happen. And 3% is is a norm in the world. I mean, some of the countries have triple digit, almost not triple digit, but double digit inflation. Um, so I think, I think when you're looking at investing, the way that I think you should invest is that you should buy and try to hold for at least 5 years. I think if you're doing that, then you're thinking can silver break 100 and can gold break 10,000 in 5 years? And I think that those numbers are numbers that can happen. I think silver could move faster, but I think ultimately you're buying a price that is the market is saying it could be a little high, but it also could be the right price based on what could happen next year with quantitative easing and higher and lowering interest rates. You're also looking at what the central banks did. The central banks last month had their biggest month of buying. They bought almost 60 tons of gold um, at $4,000 gold. So as much as people are saying, and I hear it every day, like, oh man, gold is expensive. The central banks don't think it's expensive. They're buying. Why would they buy? They have analysts that are smarter than you and I combined, right? I mean, they have a whole team, and they're saying that it's the right price. So, listen, I think it's a moderation thing, which is a big thing that I propose is I think that you should have a number of investments and you should be hedged and you should move those hedges in different ways depending on where your life is, what your goals are. And so, and I think in terms of hard assets, gold and silver are still priced at a place that makes a lot of sense. And you got to have these things in your portfolio. You absolutely have to, because
Yep.
if the stock market pulls back and we have a major correction because a lot of the AI risks were wrong, you're going to be like happy that you didn't have all your eggs in one basket. And you may, in 2 to 3 years, silver hits $100 an ounce. You may need it for some reason. And, that's the thing that I remember 2022 was so like poignant, was that everybody that was only in stocks was upset because the stock market dropped 25%. But if they had some gold and silver and they needed the money, gold was taking off, they could have taken, like, you have to give your pie different things so that where the market is, you don't sell when it's down. That's the real game, right? And so that's the thing that I tell people is I don't have a crystal ball of where things are going to go, but you got to have some gold or silver in your portfolio to balance the kind of crazy times that we're seeing. I mean, it does seem strange that you're seeing unemployment at the highest rate for 19 to 28-year-olds in the history, yet the stock market is at around all-time highs. You see massive layoffs with corporations over the last 30 days, yet stock market's at all-time high. And you see AI doing a million great things, but many, many failures on that front also, yet, the Magnificent Seven makes up, I don't know, 36 or 37% of the S&P. So there's a lot of these things that just, you get this information and then you look up to see what the scoreboard says, and the scoreboard says something different. So I think that is important to understand. I think that what I like about AI, what I think about is if most of the bets are going to fail, what bets don't fail in AI? And the one bet that doesn't fail is no matter what, the data centers are being built. They're spending billions and trillions of dollars to, because the data has to come in and then it has to come out, right? How do you keep those data centers cool? Because these machines are running, they're running hot.
Yeah.
Silver plays an important role in that. So the trickle effect, the outside effect is like maybe I don't pick the right company, but what do they need to build that infrastructure? What do I need to keep that? Like everybody knows I had a computer that ran hot, right? Once it runs hot, you're dead. Once the CME runs hot, they'll shut down, quote unquote, whatever they're saying they're doing. But ultimately, what it is that silver plays a part in that scenario. So you're buying, it's kind of like what happened during the gold rush is like I always tell him, and my oldest son loves this. He loves this. He's like, the guys that sold the shovels are the ones that made all the money, right? And Max, my son, always says that. And it's true, right? It's true. And so whatever shakes out of AI, it is going to be important. It is changing the world, but a lot of the ideas are going to fail. But who is powering that energy? And silver is in there. Silver's a part of that. So I think that's important to keep in mind.
No, I completely agree. And I actually think that personally, Colin, just my own personal speculation, I think the rates are going to go even lower to zero because I think that crash is going to happen first quarter. Everything we're seeing from some people on our side at Schwab are kind of confirming that, and have been watching the patterns for years on it. Speaking of which, I just checked, and it looks like the future prices. I showed you the prices before earlier in this podcast, which are not the future prices. But if you look at the future prices, silver, they seem to be ahead of the spot price finally. Do you think that's sustainable, or do you think this is a temporary measure and will return to backwardization in the not too distant future?
Well, I always think a lot of this is built in already, right? So they already probably anticipated a price that was, 1 to 4% higher. And so they're sort of getting ahead of that price, which, leads me to that, the whole idea is it sort of fool's gold to believe that that price is where it's going to go? Because I do think in the short term, you could have a sell off too. And that's why what I do typically is I buy every quarter. I don't try to time it based on something that specifically happened in the news. So I'm going to buy again. I'm going to buy in 2 weeks. Wherever the price is, I'm going to buy. And that's just how I round out my year. I have certain things that I do. And part of it is buying gold and silver for my family. And so I've just done that historically, just every quarter. And depending on what I have, I buy. Do I buy more depending on, what's happening in the market or this? Sure, because I own a lot. I have more than most. But I consistently buy because I know that I'm just looking at the 10, 20, 30-year run, and I know that I might not pick it perfect, but I know if I consistently build a portfolio of assets, I will win over time. The other thing, and this sounds crazy, but like it's also money that you can't spend, right? I mean, once you buy it, you put it in the safe, it's sort of like it's gone, right? You can't, whereas the money sits in the account, you find things, stuff that you don't need to buy. So it's a good way to save too. I'm relatively conservative with spending, but listen, everybody's got things that they see that they want to buy, and the world is geared towards buying. So it's a good also way that, if you had a good year or whatever, it's like sock it away, diversify from other things, put it in the safe and sort of forget about it. And I do think that's, important. And one of my first clients that was very wealthy that bought for me pretty consistently, not every quarter, but almost every quarter, he would say his analogy was it's like when you have your home insurance comes back every year and they calibrate it up a little bit, his fire insurance for his house. He would look at his precious metals the same way and he'd say, listen, if the cost of things went down, I don't need to go up 3 to 5% to rebuild my house. But if it continues to go up, if the dollar continues to lose value, I can't go wrong with putting a little bit more every year. I'm hedging myself, which is, in essence is really the whole idea of insurance, right? Is you're sort of hedging. And insurance companies do the same thing. They hedge their bet too. They won't insure every home on your street, right? Because if a fire comes through and lays everybody out, they're either going to be paying out a claim on 5 houses. So they spread out their risk. I'm a big believer in spreading out the risk. And I think that until you present me an opportunity where the dollar stabilizes and our debt is going down, I don't even think you can think about where prices could go because people have been telling me $58 silver is crazy for years. And I would always say it's crazy that it hadn't hit $58 before. I
Exactly.
actually believe the opposite. And in my book, Silver is a New Oil, I actually predicted $58 silver December of last year. Now I predicted it to hit the first quarter of next year. So I was more conservative, which is typically, but I actually predicted a $58 silver. And so it hit that number much, much faster than I thought. Within 12 months of my book, um, it hit the number that I anticipated because I looked at a million different factors, but I just looked strictly at the gold to silver ratio. It was at 100 to 1 last year. And I said, it's got to get to 70, 65 to 1. Um, but then you had the combination of gold going up a huge amount too, which is why I got to 58 much faster. So I think you and I, John, are similar in that you're making calculated guesses on where the market's going to be and where things are going to go, but also the good, smart investors just have fundamentals. And I think that's the thing that's kept me safe is that I never get too high on something and I never typically get too low on any good investment. And that's really the case. I mean, I own a lot of real estate too, and it's easy to be down on it. But there was an article yesterday in the Wall Street Journal that says people think commercial real estate is affordable again. They think there's massive opportunities, and they may be early, right? They might be a little bit early, but BlackRock doesn't think so. I don't know if you saw BlackRock bought like 3 office buildings in San Francisco,
Yeah.
of all places. Like, how crazy is that? Like, who would think to buy in that? I don't know if anyone's been to San Francisco. I mean, it's an absolute like poverty,
Yeah.
homeless haven. And yet BlackRock's like, you know what? It's the properties are 50% lower than they were 5 years ago. They're thinking long term and they're buying stuff. So it's this idea that like there's always good assets will always come back, but
Mhm.
you gotta know the timing of things and you gotta be right. But you continue to buy them, and if you buy good assets over time, you're gonna be wealthy. That's really the name of the game.
Well, wealth is long term, right? Just like your marriage is long term. There's
Right.
much of a comparison. I mean, look at BlackRock. They're the ones that drove the market down. So they're just exploiting the opportunity because
Right.
they just told you, Colin, that the crash is coming. That's what they're telling you without
Right.
telling you. And guys
Right.
like you and I try to read between the tea leaves to help our respective audiences, to your
Right.
point. But I
Right.
mean, you're not a capricious guy. You're a husband with, 3 kids, and they're not babies, but they're not, older adults. So you're still in that dependency mode. And even you can see because you saw with the vision that precious metals is the right way to go because it's the baseline for everything else, cryptos and all the other stuff that the ones that are going to, survive. You just happen to be ahead of the curve and you're buying and you're not a guy who can afford to take a lot of risks. So that should say something in and of itself, I would think. Which
Well,
leads
I could take a lot of risk if I
you
wanted
could,
to,
sure.
but I think I worked hard. And that's the thing that I always tell my team is that everyone that called that buys from us worked really hard for that money. And if you think about that every time you make a purchase or every time you talk to a client, you'll think about it, you'll think about them in a different way. And I
100%.
really truly believe that that is the way that we're the stewards, right? And that before I came on with you, I was with a pastor actually. We were talking about gold, and we were talking about, how they talk about how gold, in the Bible they talk about how gold is in heaven. When you go to heaven, it'll be gold, and it's layering the streets with gold. And I don't think it's actual gold, but I think the analogy is that it's the purity of it, right? That gold is so pure. It's like the perfect kind of purity asset,
Yeah.
and it's safe, and it's like a steward. And there's 400 plus references to gold in the Bible. And it really got me in a spiritual place talking to this pastor about it. And he was saying that, like, there's so many times that the idea of gold comes into play in what he does and what he's thinking about. But part of it is being stewards of our own destiny, and how gold plays a significant part in that. So, but yeah, no, it's just fascinating that everything is finally coming around full circle to precious metals, and getting away from debt, and really focusing. I was reading this book about the 1929 crash, and really a big part of that crash wasn't that the stock market was overvalued, and it was, but part of it was that everybody was leveraged. Everybody had too much leverage. That's what really brought the market down in 29. And I think about today, and I think about how much leverage there is today, and how many derivatives there are in everything, including gold and silver. These ETFs, they're all derivatives, right? You're not buying the actual thing. And that's the thing that's scary as an investor is, can you survive these collapses? And if you look at 1929, there was a lot of people that made more money than they've ever made after that. And they bought opportunities, but they were the ones that had diversification, that had liquidity, that had it available. But the ones that had all their eggs in one basket that were leveraged were wiped, right? Were wiped out. And unfortunately, it was a lot of people that were regular people that just believed in the hype, and they thought things can never go the other way. So it's a balance, I think. And I think that's what we do at Noble Gold is we believe in balance. And when we talk to people, it's, this is part of the pie, right? And we don't believe you should put all your eggs in one basket in any investment. And we try to have that approach, that a sensible approach to buying precious metals.
Yeah, absolutely. I know, and it is a literal thing. Thank you, Colin, by the way. When you're talking to your pastor, it's great because as a Christian, I know that's Revelations. He's talking about the streets are paved with translucent gold. It's so pure, it's
Right.
almost luminescent. That's a literal thing. But I just my point was you could be capricious, but I'm just saying generations have been brainwashed and inculcated through banking system, through the education system to believe that debt is good and metals are worthless, right? But you said it yourself. The central banks tell you double messages because they say, "Oh, you don't buy gold and silver. That's a fool's gold." Yeah, but if it's so worthless, why do you want it so badly? Why are you buying it hand over fist? And you're not telling the people that you don't control the silver market. We just saw that here recently, out in front for all to see. So that leads me to my next question, Colin, which is just your personal opinion. You've got some pretty good skin in the game and you're knowledgeable to ask. What, in your opinion, right now, for people who are investing in precious metals, what would be the best 1 ounce gold and silver coin you would recommend right now?
Well, I mean, we sell a lot of 1 ounce bars. We sell a lot of American Eagles. They're actually sometimes the American Eagle is kind of not, I want to say expensive relative to the spot price, but right now you could get pretty much the same for almost the same price. So I think if you can get a minted coin for almost the same price as a bar, I would do it. So I've actually seen kind of a reversal now where a lot of people are buying U.S. minted coins or other governmental minted product, because it's nice to have that security of having it through a governmental mint. So we've seen a lot more people buying, whereas a few years ago there was more of a gap there, and it made more sense. But also if you can go bigger, you can get more ounces too. So I see people buying 100-gram gold bars or 10-ounce gold bars or even kilo bars, because you can just squeeze a little bit more out. I think any of the product that we sell is desirable anywhere in the world. And I've tested that out. I've just brought some of my product to other places as I'm doing shows just to see, and they're always happy with the minted bars or the governmental minted coins that we offer. Either way, you're going to be fantastic in those products. But yeah, I mean, I'm old school. I do like American Eagles. So I've been recent. So I think my next purchase, which will be in like 2 weeks, I'll buy some American Eagles, gold and silver, and I'll sock those away. So I think you can't go wrong with those.
Cool. I appreciate that. I was just muting so you could get that all out. That helps. Thank you. I think that'll help our audience immensely, give them some direction. Yeah, Eagles has been pretty popular for a while, so I'm not overly surprised to hear, but it's good confirmation. Turning our attention a little bit, Colin, to a subject we first started with when you and I met over a year and a half ago, and I think you liked it, and so let's go back to that. On this aspect of silver, specifically junk silver, which is also an affordable way to get into the game for those who
Yeah.
don't have as much liquidity as others. What I found was interesting, it seems to be currently selling below spot in some cases right now. Can you tell our listeners why you think this is happening, and would you make a recommendation to take advantage of the situation?
Yeah, it's probably the first time since I've been in the business for 17 years that it's definitely the first time this has ever happened, but it's probably the first time that I would say it's a good buy. Um, because for divisibility purposes, getting a dime, getting a quarter, if if and when we go into a bartering situation, you're going to want these types of items. So, yeah, I mean, I think the only thing that I always tell people and our staff tells people is that if you're truly buying junk silver, the coins don't look great. They look a little bit, some of them could look great, and some of them could look like, maybe you went 3 rounds with Mike Tyson. I mean, they're typically right. I mean, they're circulated coins. So
Yeah.
the only thing sometimes is like when we deliver, we just want to tell people that these are circulated coins. If you want to pay for coins that are perfect, they're going to cost you more. But if you just want bang for your buck, they're beat up a little bit. There were coins that were in people's pockets and
Sure.
they were buying stuff with. So that's the only. So when you drop them out on the table, I remember the first time with my kids, they were like, "These don't look like the other coins. The other coins you have are perfect." And I said, "Yeah, because those are BU, brilliant uncirculated. These are circulated coins." And so you just have to get comfortable with the idea that they're going to be they're not going to be in perfect condition.
Well, it's much like exactly. I mean, but you're going back 19 pre 1965, 90%, pure silver. It still has
Right.
value.
A hundred percent.
If you can get past the aesthetics. I mean, it's akin to, going to the bank and getting fresh currency or circulated currency. It still has
Right.
value. It's just a matter of whether you care about that or not. So yeah,
Yeah. 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 No, I mean, listen, we're in the expectation business too. So we want to
true.
set the right expectation for clients as they receive something. And, I just had a situation once where like a client bought it and then he showed it to his wife and his wife was just totally just down on this thing. But, they bought silver from us at like $14 an ounce. So they've done really well. But,
Yeah,
so I think it's a good buy right now. It's a little different because you typically get it in the bags, so you got to store it in the bags.
correct.
Sometimes people want things that are just easier to store, and just like kilo bars are great. I mean, you can fit a lot of kilos in your gun safe. 1,000-ounce bars, I sometimes people try to get them delivered. I would not recommend. They weigh 65 pounds. So I think they're just too big. If somebody wants, that size, we'll store it for you. It makes more sense, because you just don't want to lug that heavy thing around,
Right.
But I'm also, I love junk silver. I love America the Beautiful 5-ounce coins. Those have skyrocketed. I think we sold more than any dealer in the country of those. I tried to buy every one of those I could find, and those are selling well above the spot price now. And the spot price has gone up, so people have done great in those. So I like that kind of stuff. I like the U.S. minted product.
Yeah, yeah, agreed. And a nice side note too, to your point, Colin, is I have one of my regular guests that comes on monthly. He was concerned about investing in metals because of the weight, but with junk silver, it's lightweight, quick on the go, and you
Drop it in
don't
the
have to.
bag.
Yeah, in the future, when you use silver or gold to buy things like food or clothes or even a house, it's not overly cumbersome, and you drop
Yeah.
it in a bag, and you're not overspending for something that you don't need to, right? Like you don't need to
Yeah.
bring out an ounce of silver if what you're buying only requires a little bit of junk silver.
Sure. If it's a $5 purchase, you just bring out a dime, right?
Yeah, well, you're gonna
Yeah,
bring out an
that
ounce of silver for that.
yeah, that gives you the flexibility. And I think that's why it's a really good bartering metal.
Yeah.
And I agree with you 100%. It makes a lot of sense to have some. So if you've already gotten some bars, call us. We'll send you out some junk silver.
And to your point about diversification, it's another diversification within a diversification. So you're getting a
Yep.
lot of you're getting a lot of quality out of the quantity and vice versa.
Yeah.
So it's a
Yep.
win-win situation. Colin, I'm hearing that stable coins like XRP and Stellar Lumens, which are both pegged to gold and silver, will help eventually kill off the central banking system. Can you corroborate any of this with your findings?
I haven't. I mean, in terms of being pegged, they're owned by the entities that
Mm-hmm.
are. Yeah, I mean, I guess what it comes down to is, how much they own relative to how many tokens are out there, and what's the mechanism to keep them more stable. And that's the thing that I always sort of run into, similar to what you run into when you have an ETF or even the whole stable coin idea, is who's corroborating to make sure that you have the right amount. I think it's a good idea. I mean, it's the one thing that I've always said about crypto is that they have to turn into either a currency or a business. And if they never do, then they're never going to be worth anything. And I think that's part of the reason we've seen this recent pullback is a lot of these cryptos have had enough time to mature to prove the concept that they said that they're going to do, and a lot of them have not. And so if they don't, then what are you buying into? Like, the analogy that I remember people saying is they're kind of like penny stocks in a way, some of them, and some of them are like startups. But those things fail if they never prove the concept. And so XRP, I think is being used enough. I think there's probably five cryptos that in my opinion, probably survive through everything. And XRP could be one of those that could do it because it is being used. The banks are using it. It is being transacted for business. If they're putting aside crypto to back, or I mean, silver to back some of it. These are all the elements that, in my mind, make it more of a currency or a business, or maybe a combination of both. So, listen, I don't have a crystal ball in terms of where those things can go, but I
Yeah.
do own both of those tokens, and I've held them, and I think I think they're sort of flyer investments, and so I have a little bit of that in my portfolio too. But I typically, as I get older, I need to be able to be explained what the thing does,
Mhm.
what the company does, you know, and I have to be able to understand it in a very quick turnaround time. And if I can't, I lose interest quickly. And I think that's the big issue with crypto is that they tell you the story of what they are going to do or how they're going to change, but that story is being told for 5, 6, 7, 8 years. It's like if it never does the thing, then I'm just buying another startup, and I'd rather put 98% of my net worth into investments that I can completely understand the demand and the need and the wants. Similar to Warren Buffett, right? Like you don't want to lose money. Um, and so I don't know if you saw this article about Charlie Munger that came out a few days ago about his last years, but it was pretty fascinating. His last like few years, he literally was still buying investments. He was still trading investments. He bought some real estate venture like 6 months before he died. And then like a day before he died, he was asking about the AI implications to a friend of his. I really admire people that keep the mind moving through I mean, this is a guy who's a multi-billionaire, one of the smartest investors in the world. continuing to ask questions and to dive into how things work. And, a 100-year-old guy thinking about AI, investing in a real estate, he invested in a massive real estate project at 100. And it's just amazing to me that someone would have like the idea, not only that like it's a good investment, I want it to live on, but like continuing to want to see things mature in the world. It's such an amazing worldview. But my point being is that him and Warren Buffett strongly believed in not losing any money. And I don't think in crypto, if you invest in it, you can have that philosophy. I think you have to throw that theory out the window a little bit because a lot of those coins are not going to be around in the future. And
I
you have to
agree.
be okay
Sorry, go
with it.
ahead.
Yeah, and you have to be okay with that.
Well, yeah, it's a calculated risk, but I do agree with you. I think there's about 7 to 10 that will survive them. But that's why I brought up XRP and XLM or Ripple and Stellar
Yeah.
Lumens to be precise. The companies, like you said, because they are pegged to gold and silver, and they're one of the primary coins that are decentralized. You can own in your hardware wallet outside the system. But also, to your point, Colin, they are heavily invested in the research and data, and they're tied to real-time settlements. So they're going to be part of the blockchain that moves the real-time settlement, something real for something real, through precious metals de facto.
And
And
that's important.
and that gives them stability and comfortability. And I actually think the cryptos, those specific cryptos, to be precise, will actually help precious metals in the aspect of, typically precious metals, as you know, is known as a wealth preservation or wealth defense. But I think these particular cryptos will be on the wealth offense, and they'll help the cryptos grow because they're tied to pegged to the blockchain. So I think that's where they have a decisive advantage. But just wanted to get your take on that. Last question for today, because I know you're busy and I want to honor your time. We're getting information that strongly suggests, or even possibly confirming, that JP Morgan, I think it was this past weekend, moved one of their entire trading desks to Singapore overnight because it offered a tax-free haven as well as connections to BRICS nations. What do you make of all this, and what implications does this have for COMEX?
I saw that information too, and I mean we're such in a global world that can you blame anybody for not wanting to pay tax, right? I mean, if these traders are, these are $1 million traders, right? And they're probably thinking, you know what? All we got to do is move this internet to another place, and I could just hang my hat and I can pay nothing or significantly less. Uh, so I think it's just it was just a tax move, in my opinion. I think that, obviously I haven't seen 100% confirmation that this is true, but I've seen the leaked reports happening many times. The only, me being someone that's always worried about some of these situations is if it wasn't a tax move and they're trying to get outside the scope of the US because of something bad that could happen, they want to have the flexibility to flee. Those things do make me nervous. Those ideas that someone may be clearing house because they know that the gig is up, right? That the whole thing, it's a house of cards. So there's a small percentage of me that thinks that could be, but I think at the end of the day, like most of these traders thought, like if I can move away from a pretty significant, these are the 40-50% taxpayers. They were in New York City, one of the highest tax states in the country. Um, it probably is just fundamental, just wanting to put more money in their pocket, and good for them.
Okay. Just wanted to make sure that wasn't going to have necessarily any adverse effects on the public and us as investors.
I don't think so.
Okay. God willing, yes. So, well, thank you for that, Colin. I appreciate that. As we close out the podcast for today, we're in December. We're in the holiday season. And I know that you, as our chief sponsor for Precious Metals, where we put our own money and our family's money to invest in, has some holiday specials. So I'm going to pull up and have you talk about those, if you would kindly, good sir, some of the promotions that you have for the month of December.
Yeah. Yeah. So we have these coins. It's obviously we're festive here at Noble Gold. And yeah, for any qualified account, you're going to get 10 ounces of these holiday coins. If you don't want a holiday coin, we can, swap it out for American Eagle too. So it's just, some people love to have these coins, and I have a lot of clients that will give them away as gifts. But in essence, it's a way to get you over the hump, right? A little extra silver, 10 ounces of silver. So, I mean, this is, $600 in silver that you could get for free delivered to your doorstep if you do any qualified IRA or direct investment purchase. You'll get these on top of what you're already going to do with us. And it's just a way to say thank you. And we appreciate you, John, and everyone
Definitely.
listening. And, at the end of the day, I do think it's a great time of the year to call and get information because,
Mhm.
like most people, usually people have a little bit of time off. And so it might be a good time to read about gold and silver or ask a lot of questions. And we're going to be open pretty much every day. We are closed the day before Christmas and the day before New Year's. But every other day, we're going to be around. So if you got time, you want to talk to a friendly person, give us a call. We'll send you out some free information, and we'll see if it makes sense for you and your family. And ultimately, it's never too late to protect what you've built. And we respect what you built. We respect how you got there. And if we can help you get to the next step and help you protect some retirement money, we'd love to do it. And if I don't talk to you before then, absolutely happy holidays. Amazing partnership. Love your show. Excited for your growth. And it's going to continue to grow and grow as more people talk about you and catch the show. And it's just, I think in a year from now, it's going to be amazing what you built, and hard work and determination really does pay off.
Absolutely. You would know a thing or two about that, Colin. And thank you for supporting us the last year and a half in the process of
Absolutely.
coming back to us and showing faith and loyalty because we can't do it without partners like you. And what we'll do is we'll leave the link below here in the video in the description, noblegoldinvestments.com. If you use my promo code JD Metals, you get the best pricing and support. So far, the people that have invested with you have had nothing but good things to say, and I'm not surprised by that, but it's great confirmation. It gives a lot of peace of mind for you and for me and everyone involved. So I think we'll see you again later this month. But in the meantime, Colin, I want to wish you and your family a very Merry Christmas and a Happy New Year. And I think it will be a Happy New Year for us, those who are prepared. And I appreciate your time. And we look forward to seeing you again on the next podcast.
Thanks, John.
Thanks, Colin.